You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Marchese, mining analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, Chris.
Great to be back.
Well, most of our show is going to concern China. And so we'll dig into their savings rate, how they plan to turn their economy into something different, maybe even bigger. And they have a huge savings rate. What are they going to do with all that extra cash? But first of all, the Fed minutes were released from their latest meeting. Has that had an impact on the mining markets?
No, it hasn't. I think that, the headline that came out was, that the Fed will start tapering in September. That's been the consensus all along. So it's been priced into the metals. Although the data that's come out after the minutes, notably the Philly Fed index, was it was bad. So things have changed since then. And with these rising interest rates, higher oil prices, and so on, I would expect some bad economic data to come out, big enough before the September FOMC meeting to make them not want to start.
Well, it seems to me in the fall is when we get the bad economic news, because that's when companies that have been losing take their write-downs. And that's why you always have that October kind of pause, like, oh my God, are we going for a dump again? And then usually it picks up, but we know in 2008 it didn't pick up for a long time when that happened.
Yes. So
fear of that happening again, especially with the stock market being so hot. I know it's kind of flat right now, but it's growing so much.
Yeah, it's
since
just
the start
hard
of the
to
year.
tell how much is because of inflation. I mean, we have inflation here. People's cost of living, if they think about it now relative to 5 years ago, is a lot higher. So there's obvious inflation, even though the government reported numbers are next to nothing. But those are doctored, of course. Yes,
of course. And we just saw that headline that said everything is too expensive except mining stocks.
Exactly. I mean, there was a bubble in the stock market in 2008, and we're already well past that level. So, that housing prices, which is can be contributed to, the low interest rates, the artificially low interest rates.
Sure, because, housing sales in the U.S., up 6.5% last month, the highest increase in 3 years.
Yeah, and that's not a good sign. This seems like 2006 or 2007. Housing could easily enter another bubble. So,
Do you think humans just have this innate instinct to gather up real estate if you have a chance? Even though it may not be the best economic thing to do, you still want it?
I don't think it's that. I think it's more that the Fed artificially lowers rates, so buying a house makes sense. Although,
and of course, depending on the market too, we were discussing before we went on air, some markets, it seems, no matter what the economy is doing overall, that local market stays hot, where people just want to move. The greater Vancouver area, 50,000 people a year move here. They need some place to stay, and even if housing prices go down, they seem to rebound in about a year.
Yes, exactly. But here's the thing, rates in the U.S. and Canada and everywhere else in the world, there's nowhere to go but up, and housing prices are inversely correlated with interest rates. So housing prices have nowhere to go but down in real terms.
Or stay flat. I think that's been the long-term analysis here, is that real estate prices will remain relatively flat, depending on some markets. So Calgary and Hamilton in Canada have seen tremendous growth in real estate, and they don't seem to be slowing down at all, but everybody else is kind of happy with what they have, and they're not going nuts about it.
It has a lot to do with what interest rates are going to do going forward. So, for example, if they were to go back to what, I would guess the market would set them at, if they were allowed to do so, would be, 2 or 3 times higher. And there's really no way, in any area that housing would be able to maintain the current values.
So it's a good idea to do your research to see if you do live in one of those areas where they don't expect much of a downturn if you're planning to invest in real estate.
Yeah, I mean, housing should be looked at more as a place to live, not an investment. I think that was a big problem in 2008 in the U.S., or 2001 to 2008.
Yeah,
and
several of the
problem
experts.
again.
Several experts I talked to said, are you buying the house to live in? In which case, whether the price of it goes up and down really doesn't make any difference, except when it comes time to pay your municipal taxes, in which case you want them to go down. But if you're looking at investing, then maybe commercial real estate or something like that that's got a little more growth potential.
Yes, exactly. And you have to understand, economics, the interest rates effect on that, and of course, upcoming areas that, will grow.
Chris, stay on the line. We have to take a brief break. You're listening to HoweStreet.com radio. We'll be taking a look at China's amazing saving rate next. Welcome back to HoweStreet.com radio. I'm speaking with Chris Marchese, the mining analyst for the Morgan Report. You were mentioning that the average American only saves about 4.4% of their income, but what's the rate in China?
At the end of 2012, which is the last data I've seen, it was in excess of 50%.
Wow. And why do you think they're able to save so much money?
It's their taxation. They don't get taxed nearly as much. So basically more economic freedom. And I think their culture has learned that savings is good. You need savings to grow. You don't rely on the government spending.
Wow. Yeah, and considering it's a communist society, not to rely on the government, that's an interesting philosophy.
Yeah, well, people call them communists, but if they're communists, we're hardcore communists. So
maybe explain.
I mean, what does their government do that takes their freedoms away that our government doesn't do?
Well, you were saying China appears to be expanding its economic freedoms. The U.S. appears to be shrinking them.
Exactly. So, that's why I said, if you have to call them communists, then, we're, even bigger communists.
Well, maybe we don't arbitrarily detain people, but with all these new security regulations and laws, in the U.S. now, they can just randomly search anyone who's within 100 miles of the border. That's the border agents. Police agencies now in the U.S. want the same right. In fact, to do what a court just ruled in New York, stop and search, isn't constitutionally valid. And they said in New York, okay, instead of just stopping black people, we'll stop everybody. Which, if you're going to be fair, I guess that's the way to do it. But have they really prevented any crime or terrorism by going around harassing people, searching them at random?
Yeah, exactly. And, the NSA, they're watching everything you do.
And they're listening to us right now.
Yes, exactly. So, we've been socialists for a long time, and it's just getting worse. I mean, it's kind of a pet peeve of mine when I'm listening to a radio show or watching CNBC or something, when people are on there describing the U.S. as a, free market, and we're free market capitalists, when in fact we're the exact opposite, and we're heading in the opposite direction.
Yeah, they're slapping more and more controls on who can do what.
Yeah, there is no free market in the U.S. Not even, it's so small. The remaining parts of it that are still here, but those will be taken away soon enough.
So where should people be putting their money right now? If you're investing today, what do you think guarantees a brighter future?
Oh, I think the metals. In terms of government, if I had to put it in a country, I would just say China, because, their economy is projected to surpass ours in terms of size in 2016. And, if you look into how their economy is composed versus how our economy is composed, they're probably already bigger. For example, they produce things. We just, over 70% of our GDP is consumption. And given the fact that we have such a small savings rate and consumer credit is expanding, household debt, gross federal debt. That's not, going into debt shouldn't mean you grow.
Well, I know the latest stats in Canada show consumer debt is quite a bit down. People have consolidated all their debts and used some of this cheap loan money to pay it off, and they're now paying a lot less in interest. And but I also thought it was curious that the government considered real estate to be consumer debt. And I said, well, if you guys run the economy right, that isn't a debt, that's a future investment.
Yeah. Unless, if central banks, they're manipulating these rates so low, and people, interest rates signal what investors and consumers should do with their money: save, invest, and consume. So having these low rates, you want to consume.
Yeah, but the credit cards never brought down their rates.
Yeah, but anyway,
you can get a low rate credit card, but overall they're still charging you 20-25%.
Well, what I'm getting at in the housing market is, so the Fed is making it appear as investing in housing is a good investment, but the housing prices will fall significantly eventually in real terms when interest rates have to go back up.
And people just won't be able to make the monthly payment.
Exactly.
Well, Chris, it's an interesting world out there. I'm glad we get to chat about it on a regular basis. My guest has been Chris Marchese, mining analyst for the Morgan Report, which you can find online at silver-investor.com. You can also contact Chris at silverinvestor.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. You can forward your questions or comments about the show to info@HowStreet.com. I'm Jim Goddard.
Silver123.net is a silver saver program designed to be as simple as possible. For as little as $50 per month, you can set up and create an automatic cost average buying program that will get silver or gold sent to your door on a monthly basis. The first step to creating an account is easy. You will supply some basic information. Next, you will add a bank account from which you will schedule your purchases. Scheduling purchases makes saving easy. Silver Saver is customizable and allows you to control the amount and the date of purchase. Once you are signed up, you are then given your affiliate code. Now you can save in precious metals and also market this program. You can use email, web pages, and multiple forms of social media to share the Silver Saver program. Silver Saver will reward you generously with physical silver or gold whenever someone you refer becomes a saver. Silver Saver not only provides you with a share code, but also allows you to place your own banner ad on a website of your own. Silver Saver is one of the best ways to start saving and accumulating gold or silver, especially at these levels. Visit silver123.net and start saving today.